Josie. Welcome back to our show, Real Life Goals. And, I am very, very happy to have you here with us. Now, you are an underwriter, correct?
That's correct.
So, in simple terms, what does an underwriter do?
Basically, an underwriter reviews the application that's given by the broker or the client directly.
Just like me?
Exactly. When you send in your application, we review the application and the credit bureau. We discuss the client's needs, and we try to come up with a solution that will work for the client.
All right. So, a lot of people are afraid of private lenders. Why do you think is that?
Well, I think one of the issues is that private lenders have been around for many years now. However, historically, most private lenders were individuals that were acting one-on-one with only a lawyer as an intermediary, working with both the borrower and the lender. Over the years, many small companies have come into the market. And the problem has been that these small companies, they haven't always worked in the best interest of the borrower. They have also been loosely regulated, and many have operated with poor ethics. So again, they haven't really been for the best interest of the borrower. This in turn has led to a negative view of the private lending space.
So in terms of negative traits of like the lender, will you say that it's only the fault of the lender, or is it also the fault of the broker like myself?
Sometimes it can be a combination. If you're not working with a broker that's well educated in the space, they will sometimes provide misleading information. I think working with a broker definitely helps the client to navigate through all of the different lenders that are out there and to get the client the kind of solution that's going to work for them.
Yes, and I can say that not all brokers are also honest and out there to help the clients, right? They have to pick the right broker that will really help them, not because they want to earn a lot of broker fees.
Right.
Right? So you gotta pick the right one that will really help.
Absolutely.
Yes. So when looking at an application as a private lender, because on the A lender and B lender, of course, they will look at, scrutinize everything from credit to income to source of down payment. We have to provide all the documents for those. So as a private lender, when looking at an application, do you look at income, credit score, source of funds?
Sometimes we are asked if we look at anything beyond the real estate. Real estate is very important for a private lender, but the answer is yes. We do look at income simply because we care about the borrower's ability to make their payments. We don't want to just lend money out to a client. We want to make sure that they have the cash flow to service their mortgage. When it comes to their credit, we do look at the credit because a lot of times clients that come to a private lender, there's a hiccup or there's a barrier as to why they cannot go to a lending institution. So we want to clean up that credit, make sure that the client rectifies the issue so that in a year or two, we can move them back into an institutional lender.
Yes, awesome. So in other words, you don't lend money to ninjas.
No,
you
we do
remember
not.
the ninja? No income, no job, no assets.
Yes, absolutely not. Again, we want to ensure that we are doing the best possible, giving the best possible solution to the client at all times.
Now, some private lenders do look at notice of assessments. Why is that? Why do they look at notice of assessments?
So we do look at notice of assessments, but the only item that's important on the notice of assessment is whether or not there is money owing to the government. We don't look at line 150 to see what's being declared. We just want to make sure that there is no money owing to the government. And the reason for that is if you do owe money to the government, it takes priority over our mortgage, and we don't want to be in that situation.
Okay. So you said that the most important factor to get an approval is, of course, the property itself, the asset itself, which is the property.
Absolutely.
So why is that? Tell us more about the property. What's the ideal property? for you?
The ideal property is a marketable property. So a property that can be sold quickly if needed by both the borrower or the lender. It's a property that's being well maintained, and it's a location. So the better location of the property, the more interested we are in that property. We also want to make sure that there's equity in the property. We want to ensure that there is enough equity to provide the client with the funds that they need to get out of the situation that they're in today.
Okay, so as a private lender, when you lend money, what is the maximum loan to value that you can go for?
So the maximum loan to value for us is 85%.
Oh, okay.
However, it really depends again on the credit. It depends on the client's ability to pay, and it also depends on the location of the property.
On the property.
Absolutely.
Now, sometimes I see a lot of other applications out there wherein the property is being declined by an A lender or B lender. Are you guys in the same wave, or do you have the same kind of like no lend zone? Like there are areas in the GTA wherein they cannot, you or the A or the B lenders don't want to lend.
We don't really have a geographical limitation. We do lend all across Ontario. But again, the loan to value is going to be dependent. A property in the GTA area will look at 80-85%. A property out in Sudbury may only be 65 or 70%. So again, it's all about the location of the property.
Okay, so that's good to know. So essentially, what are the advantages and disadvantages of private lending, really?
So the advantages of private lending is the fact that a client that does not qualify at the institution level, they do have a means to obtain the financing that they're looking for. We are by no means a long-term solution. We're a short-term solution, meaning we want you to come into our space. We'll provide you the financing that you need, but there should always be an exit strategy. So a way to get out of the private financing and back into institutional lenders.
That's right. You just want to help for a short term, a short period, because it's also expensive.
Exactly.
Like if the problem is credit, then for 1 year, we should be able to already rebuild that credit issues and then put them on the B side.
Absolutely,
right?
Yes.
So how important is it that the client would listen to our advice? Because there are some clients wherein we actually tell them, hey, let's fix the credit. Yeah, we'll pay all the debts. And then there you are again. They're back to borrowing money, right? So how important is it that they'll listen to us?
Well, it's very important because, again, we are short-term financing for a client. So if the reason that you've come to us, so there are many reasons why an individual will come to a private lender. It could be because of a loss of job. It could be because of an illness. It could be because their credit is weak and they're not able to get the proper financing at an institution level. So if the reason is credit, you want to ensure as a client that you listen to your broker,
yes,
and ensure that you keep your credit clean. You don't go out and look for further financing, and you make your payments on time. If it's an employment issue, you want to make sure that you're out there actively seeking employment so that in a year time and 2 years time, you can move over to an institutional level.
We will be talking more about private lending after these commercials. Real life goals will be right back.